Vaibhav Sanghavi is with us, CEO at Ask Hedge Solutions. Vaibhav, good to have you with us here. Thanks very much for your time. Just wanted your thoughts on the entire sort of the PSU rally that we're seeing, Vaibhav. If something, especially something like a PSU, which didn't do very well for years and on end, right? Because there was a perception problem as well. But a lot of those things started to change. It started with banks, essentially SBI, spread to other areas. Then there was defense, then there was railways. I mean, who would have thought? And typically what happens is if price moves up in a sector which you've typically stayed away from and moves up sharply, I mean, you're frozen, right? You're looking at the price go up, but you can't buy it because you did not really sort of own it at any point in your investing career. And B, you're doing something new and price has already moved up. What's the best way? I mean, if there is more here, I mean, mutual funds are still launching PSU funds. For example, the Quant PSU NFO is closing today. Would you recommend sort of retail common investors to allocate some money in these funds?
See, Prashant, I think you bang on target in the sense that because you've seen over a very long period of time that PSU basket typically behaves in a particular manner. To kind of break out from those kind of ranges, and when you are looking at a new price altogether, it's kind of a moment where it's very difficult to grapple what further decisions to be taken. The way we would probably look at on this basket is we will identify probably the industries where the structural reforms have been happening, in addition to a good policy support which is coming about now. Something like a Make in India, PLI, or probably oil and gas reforms, which has kind of happened in terms of price mechanisms. I think identify those sectors where there is a catalyst from where value, which has always been the case, has a possibility of unlocking it as well. So this is where we would probably focus on. And getting too bogged down in terms of the historical valuations and historical price band would probably make it even more difficult to kind of participate in this whole rally.
Actually, it's like phases, right? The first phase is disbelief. Then you start to say, well, we've seen the story many times. It'll all promptly come down. I don't know what phase. Are we in phase 3? Or this is something really new, right? This time is really different in that sense. Can you really argue for private sector multiples for many of these PSU kind of companies because governance, etc., is improved? And arguably it has. Cyclical, I mean, for example, banks, right? Maybe credit costs will not remain as low. It's not possible. Things are cyclical, so credit costs will rise. But can you argue for names like at least the big ones, SBI, BOB, etc., for multiples about 1.5, 2 times? I don't know, Vaibhav. Your thoughts?
No, Prashant, which is where I would probably say that, when everybody clubs every PSU under the same umbrella in terms of everything has to rally, then there is an opportunity of, distinguishing between what should ideally move or probably what should have, not moved, at all. So there comes an element where how to distinguish is, extremely important, purely because then if God forbid, something kind of probably adverse happens, then the subsequent crash or subsequent kind of price movement can be very, very painful. So stick with those sectors where, as you rightly mentioned, that there's a change in terms of governance, then change in terms of an outlook towards expansion, growth, and is being supported well by the policy measures and structural reforms.
Let's take that conversation one step further. You have PSUs across various sectors. They're in banks, oil marketing companies, oil refiners, defense, railways. Amongst these sectors, which is a sector where there are still tailwinds? Structurally, as you pointed out, there's growth momentum.
No, I think, what we have seen in terms of the Make in India program and defense-led kind of industry, I think there is long tail, there's a long tailwind here in terms of we will see these, continuing in terms of order inflows, higher indigenization, and so on and so forth. So that support will remain. In addition to that, I think in OMC companies, if the prices are kind of not kind of intervened, I think there is some further leg in terms of their movement. So those are the sectors and areas we would probably focus on. Whereas in case of PSU banks, we are not as yet a very firm believer in terms of whether we want to have the price to book multiples as equal to your private sector banks. So that is where our probably view will probably differ.
Okay, hi Vaibhav, good afternoon, good to see you in. Nigel on this side. A couple of quick questions. You know, our markets were running up on hope of earnings. And this past season earnings haven't been bad, right? I mean, it's been pretty okay. The problem is top line growth hasn't been that good, which could tell you that going ahead, there could be a bit of a scramble for market share that hurts margins. Do you think that anticipated earnings will actually, we will fall short out there? Because that's the biggest driver ultimately.
No, of course, Nigel, I think what we've seen in the last 2 quarters, there has been a massive tailwind in terms of the margins, and because of which we have seen very decent earnings from the corporates. Now, going forward, what we think that given the light that, overall consumption is kind of a little bit weakish, where corporates will start kind of, eyeballing or probably focusing on the market share at the cost of margin as well. And as raw material prices also kind of start moving up in the coming quarters, we do expect that there is a possibility where we have already seen the best of the margins, and we may see probably that as expected, in terms of the earnings growth, which is about 14-15%, by the street for the next few years, we may be marginally disappointed in terms of the overall earnings, how it can turn up. Which will also lead to the overall market movement as well, purely because we do strongly believe that the markets will follow earnings from here onwards, as because the time of re-rating has got over. Even if it maintains those kind of valuations, then may be disappointed by the earnings in the next few years.
Okay. So, Vaibhav, hi, afternoon. Then sort of sum it up for us. On the long side, what are the key bets that you're going with right now in terms of, if not stocks, at least just thematically? What would be the top longs then, as of now?
See, I think from when we talk about long, on the portfolio basis, as against our earlier view where we, really thought that global markets are kind of crashing, what we are seeing is basically an evidence of soft landing actually happening, and probably the interest rate cuts not as quickly coming as quickly as everybody would have expected. So from a global standpoint, where earlier we thought that global economy will crash, herein is where we do think that we are turning slightly bullish in terms of the technology sector, where we do see that sector is kind of bottoming out. At the same time, from a local perspective, there may be a tactical trade on the private banks purely because they've been hammered. But I do think from a medium to long-term basis, we'll focus on industrials, renewables as the opportunities where we would probably ideally want to place our bets on.
Okay, you just to complete that point, you said private banks, but that's only a tactical trade. So you think that more on a more fundamental basis, this pain is going to last for a while, this underperformance?
See, let's kind of be from a overall sector basis, let's analyze in the sense that we have seen the best of the asset quality at the time of best of the margins as well. And given the light that incrementally we may see some amount of deterioration in terms of the asset books, at the same time margins kind of getting compressed. My sense is basically on an overall sector basis, we do think that it would be neutralish or probably in-line performer with the markets rather than what we used to earlier assume in terms of being outperformer. So of course the valuation is slightly in terms of their support, but from the earnings standpoint, I think this is a segment where we may see some amount of downgrades going forward.
Okay, all right, Vaibhav, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC TV18. Thank you for joining us. We'll take a quick commercial break here. As always, we'll get you trading ideas with our technical experts on the other side. Stay with us.